How can you tell you're investing your capital in the best project, especially when multiple investment options are available? Download and customize our capital budget spreadsheet template, available in Microsoft Excel and Google Sheets to prioritize the best investment options for your company. This template includes an internal rate of return, or IRR calculation, a weighted average cost of capital, or WACC analysis, a capital budgeting evaluation, an adjusted basis calculation used primarily for real estate and assets investments, and a CAPM analysis to analyze stock returns. This template will help you evaluate the best project to invest in, given your risk and reward tolerance. In each tab, blue fields are inputs in which project-specific details can be entered. The internal rate of return, or IRR, measures the profitability of an investment and takes into account the initial investment, the future cash flows, and the holding period. Imagine your company has two projects. Project A requires a $100,000 investment with expected cash flows of $30,000 per year for the next 5 years. Meanwhile, Project B requires a $50,000 investment with expected cash flows of $15,000 per year for 5 years. By calculating the IRR for each project, you can determine which project provides a higher return on investment, or ROI. On the IRR tab, use the bar charts to analyze present value and net cash flows over time. Also, determine the break-even point, the point when revenues equal costs, and the payback period, which is the amount of time it takes for an investment to recover its initial cost. Customize the blue input fields to match your project's specific costs and revenues, and the template will automatically calculate the IRR. Use IRR to compare projects with similar risks or to evaluate a project's performance with a single metric, as a higher IRR indicates better profitability. Now, if you want to compare your investment's performance against other opportunities, the WACC tab is the way to go. Weighted average cost of capital, or WACC, represents the average rate a company should pay to finance its assets. Suppose your company is considering two expansion projects with different financing options. Project A will be financed with 40% debt and 60% equity, while Project B will be financed with 60% debt and 40% equity. Calculating the WACC for each project allows you to compare their financing costs and ultimately choose the project with a lower cost of capital. Enter the required data on each section, and the WACC will be displayed at the top of the tab. A high WACC can lower a company's profitability, while a lower WACC can increase profitability by reducing the cost of borrowing money. Now, at the center of WACC is the unlevered beta. A higher unlevered beta means that a company is more volatile and riskier than the market average. To calculate the unlevered beta, enter the company's levered beta, debt total, equity, and tax rate. The unlevered beta metric is then automatically calculated and compared with up to 10 different companies. The ability to compare business risk among companies in the same industry can help investors identify potential opportunities for growth. And remember, if you want to utilize this capital budgeting spreadsheet to manage your business finances, you can download and customize it for your needs right now. Capital budgeting is the process of evaluating long-term investments and encourages long-term strategic thinking to evaluate an investment's financial viability. Navigate investment opportunities with the overview section. It provides a quick glance at each project's crucial metrics, such as cash flow, net present value, and break-even point. By using capital budgeting techniques, you can calculate metrics like net present value, return on investment, or ROI, and the profitability index to compare and prioritize each project based on their financial performance. Just customize the blue input fields with all investment details, and the template will automatically calculate the results in the tables and charts. Use capital budgeting when you need a comprehensive analysis of multiple projects, each with different costs, cash flows, and durations. Now, What about when you want to accurately determine the real value of your investment after considering all the expenses you put into it? For example, say you purchased a rental property for $200,000 and invested $50,000 in improvements, but over the years, you've claimed $30,000 in depreciation. The adjusted basis for the product's value would be the $200,000 purchase price plus $50,000 in improvements minus $30,000 in depreciation, which equals $220,000. This adjusted basis formula is essential for calculating taxable capital gains or losses when selling the property. This tab also calculates the adjusted basis for assets like stocks, mutual funds, or bonds. Provide the details needed, such as the transaction costs, improvements, and depreciation, to analyze all results for the investment. This information is crucial for maximizing your returns and minimizing your tax liability, aiding in reinvestment and tax planning decisions. Last up is the Capital Asset Pricing Model, or CAPM, which helps to estimate the expected return on a project given a portfolio of other projects. So let's just say you're considering two different stocks to invest in, Tesla or Microsoft, but want to understand their potential returns based on their risk relative to the rest of the market. By using the CAPM formula, you can estimate the expected return, aka profitability, of each stock and compare their respective levels of risk against your own risk tolerance. This tab calculates the CAPM of two different stocks and data for the CAPM model against the U.S. Treasury 10-year bond yield, the return of the market, and the beta of each stock. Enter the date, price of the stock, and the S&P 500 price of that same period. To streamline your investment analysis process and better inform your financial decisions, download and customize our capital budget spreadsheet template in Microsoft Excel or Google Sheets right now. Next up, check out our business plan template to create a winning plan backed up by data for your next business venture. Thank you so much for watching.